Hi, good morning, everyone. Welcome to our EEP training here at Trevisa Financial. We are so glad that you could join us, and we have Norma Summers, your account executive, with us today.
Hi, Monique. Thank you for leading this training today. Everyone, thank you for joining us on our weekly trainings. Remember that you can join as many trainings as you'd like on this Earned Equity program. There's always room for more questions, so feel free to jump in anytime during the week. Glad you could join us. Again, I'm Norma Summers, your account executive, and Monique Minaya is our sales support manager. We are a team, and so I'm really glad that Monique is here to present this Earned Equity program. She brings a wealth of knowledge. She comes to us from the government entity, so we definitely have really very, very strong support for you guys here with Monique. Thank you again for choosing Trevisa, and let's get started. I think we're a few minutes behind, so let's get going because there's a lot of information to cover. Thanks, Monique.
Yes, absolutely. This is so true. So I'm going to share my screen. I had a little bit of technical difficulties this morning, but we've got it up and running and ready to go for you. Okay, so as Norma introduced me, my name is Monique Minaya. I'm the sales support manager here. So I worked over at the government entity, as she mentioned. I ran all of operations. I helped put a lot of the processes together, a lot of the process flows. I was on the underwriting guideline committee, and so I really know a lot about EEP, the ins and outs, and I'm just really excited to help you grow your EEP business and be extremely successful in EEP. And then, of course, we have Miss Norma Summers, your account executive, and she brings us a lot of information in regard to sales, how she can help boost your business. We have flyers that we can give for you. She's just always talking to me about, how we can make everything better for our clients, how we can help support you even more. So we are here as a team to help you all, and excited to do it as well. So why over at Trevisa Financial? So coming to Trevisa Financial was because they really feel like, no one deserves having homes more than first-time home buyers and the people that are underserved. So creating that generational wealth is something that is very important to all of us here. And one of the programs that we have that definitely does that is our Earned Equity program. So we're going to get right into how it works. The Earned Equity works by having a government entity. So our government entity is a Native American tribe in Porterville, California, by the name of Tule River. So essentially what happens is that Tule River has access to purchase as many homes as they want through FHA, non-owner occupied, okay? And so you have a home buyer that just doesn't seem to fit into that mortgage box. Whether it's they're self-employed and they write everything off, their ITIN, their credit scores are lower, they may not have very many trade lines. So we have this program to where your home buyer just doesn't qualify. So we get them pre-approved for EEP. Essentially, we have there's underwriters over at the government entity. So you will submit your file number 1. We call that phase 1. That is going to be your home buyer TBD file. And we send that over to the government entity for pre-approval. Okay. As soon as they get pre-approved, your home buyer can then go out and find whatever home they want, the home of their dreams. And after they've put it under contract, put the earnest money down, then there is an assignment addendum that gets signed by both your buyer and seller. And we will get it signed by Tule River. And then, we'll go through the process of mortgage flow, conditions, getting our clear to closes. At signing, simultaneously, The government entity will sign the FHA loan docs, and then both Tule River and your home buyer will enter into a homeownership agreement. This homeownership agreement has a memorandum that is recorded on title. So this is what gives them their secured interest in the property. Okay. Here's a brief look at the players here. We've got the government entity in the middle that's going to step in with to have the relationship with the home seller obtaining the FHA loan to pay them off. And then they're going to sign the seller finance agreement, which we call the homeownership agreement, and create that relationship with your home buyer. So this homeownership agreement gives your home buyers protected rights. Because the memorandum is recorded on title, the government entity can't go and sell the home or do anything with the home without the home buyer knowing. A 1098 is given to the home buyer at the end of the year to write off all of the interest. So they get the tax benefits, the security and pride of homeownership, the full rights to use, improve, and sell the home. And they're building equity while they're doing all of this. So we have low down payments, 3.5% for U.S. citizens, non-perm, DACA and ITIN, low and no credit scores. We have our 3-month bank statement program for income qualifying, not only for self-employed, but also for wage earners and 1099. Our DTIs go 50 over 60. And then there is no source and seasoning of funds to close. So if you have a home buyer that just doesn't, feel comfortable putting their money in the financial institutions and they save it all at home, that's perfectly fine. They can deposit it all prior to closing and provide us with the bank statement at that time. We also only need to verify MRIs in their bank. Anything over that can be documented with a letter of explanation as where the funds are coming from. Bankruptcies are okay. They can start looking for their home and just need to have that bankruptcy discharged 1 day prior to closing. We take all FHA approved property types. Since this is an FHA loan, the property requirements are heavily guided with FHA. And then our seller contributions up to 6%. So this really helps offset all of the home buyers' necessary funds to close. So just to make a note, the seller cannot contribute towards any of the entity's fees. I'll go over the entity's fees here in a little bit, but just keep in mind that the seller concessions can only go towards the FHA fees. And the reason behind this is because none of the government entity fees are on the CD. They have their own separate form. It's called an ICCD. It's an initial closing cost disclosure that is presented to your home buyer later on in the process once we have all of the necessary disclosures. And this goes over the entities fees, the FHA fees, and it gives us a bottom line. So trying to utilize 6% seller concessions to offset that is definitely an important part of bringing the funds to close from your home buyer down. So for the 3-month bank statement program, this is our most popular income type. And so obviously what we do is we're going to take 3 months business related deposits, and we are going to divide those by 3. And then the standard expense factor is 45%. Okay, so we definitely understand that at times you have certain clients that are maybe service business related. Maybe one of your realtors wants to use this program, or somebody's a massage therapist and they don't have any overhead really. They don't have any employees. So if this is the case, with some additional documentation, most people will utilize the CPA letter. We can get the expense ratio all the way down to 10%. So keep that in mind when you're looking at qualifying your self-employed 3-month bank statement borrower. In addition, when you're qualifying all of your other borrowers, you're looking for those borrowers that just don't quite qualify for traditional financing because of maybe their citizenship status, ITIN, DACA. We do have the full doc types that are for W-2'd. They just need a prior year W-2, and it's actually 1 month bank statements and a written VOE. Now, we only require 12 months employment history. So, having those people that maybe have switched jobs recently, if they do have gaps, we do still want LOXs for those gaps. But again, DTI 50 over 60, we do need a verification of rent for 12 months, and it can be written. We only need documentation. Further documentation is if they live with family, or they have a credit score under 620, and a higher DTI. So if you want to know those exact guidelines, reach out to me. I'm trying to remember them. Minimum 580 credit score with only one bureau. So if you pull a tri-merge and you're only pulling up one score, that is completely fine. We only need one trade line, 12 months, 0 times 30. And we also do have a no score program. So if you pull up a credit, there's no scores. We also only need one alternative trade line, 12 months, 0 times 30. And those are in addition to the verification of rent. Okay. Assets, we do allow gifts. So if your home buyer can get a gift for all of those entity fees. So the seller can't contribute towards them, but a gift can go towards those fees. When we're talking in regard to the property, this is sometimes the documentation that can hold up closing, because if you have a property that is 1978 or older, and or the appraisal condition comes back as a C4 or greater, then we do need a home inspection. And when you do need a home inspection, you also have to get a certified home warranty with roof coverage. We also have an overlay with the entity that a pest termite inspection is required in 35 states. And we also have the full FHA appraisal. So if it comes in subject to, we definitely need to have all those repairs completed. So, these are types of situations that can delay the process. I will say that your first 1 to maybe even 3 files, they will be bumpy, they'll be rocky, there will be things that you will find out that are, unique on this program that you're not used to in traditional mortgage. So setting the proper expectations is extremely important, not only with your buyer, but with your realtor partners. So here are the funds to close that I was talking about. The funds to close consist of 3 different items. So you have your bottom line from the FHA final CD. Okay. And as I had mentioned, you can use all seller concessions to bring that down to just MRI, which is your minimum required investment, 3.5% minus earnest money. And then we have the first month's payment to Tule River. So Tule River requires your borrower to bring in the first month's payment. This is part of their closing costs, their entity fees. And the first payment consists of Tule River's 30-year fixed total payment plus their servicing fee. Their servicing fee is calculated by taking 0.5% of the total loan amount and dividing that by 12. So this servicing fee, though, it's very important that they have a servicing fee for your home buyers to take care of them after closing. They will send out their monthly mortgage statements so they can see their balance going down. They will send out those 1098 interest statements. If there's any issues with, maybe utility companies, they're there to help and support the home buyers after closing. Okay, so let's get into the specifics about the homeownership agreement. this is something that always comes up that I wanted to, well, Norm and I really wanted to make sure that everybody was clear and understood how the program works in regard to the homeownership agreement, because the homeownership agreement is a 40-year structure. So even though your home buyer is paying the 30-year fixed mortgage, the homeownership agreement is a 40-year term. Okay. So let me explain how this works. The program design is so that there is no equity share or there's no back end split. So what that means is once your home buyer is ready to assume the FHA, the government entity's loan, they can sell the home. Whenever they're ready to exit the program, all of the equity is theirs. So it's more of a pay as you go model versus the entity splitting equity at the end. So it also supports the tribal goal of revenue and asset growth because, they're not just walking around saying, we'll buy a house for anyone for free, obviously. They want to stay in business. They need to have this revenue and this growth. They also need to have, reserves. So if for some reason somebody decides to get up and walk away from the contract, they're able to continue making payments until they sell that home, and it doesn't affect any of our other homeowners. Okay. So the home buyer is paying every month the government entity's 30-year FHA fixed payment with that servicing fee. And then the 40-year amortization on the homeownership agreement is basically because it creates that fixed differential for the tribe. Okay. So basically, I'm a handsy person. So we have our 30-year fixed and our 40-year EEP contract. It's going to be going down a little like this. So that differential is essentially what the tribe is making for their asset, for their income, for purchasing this home for your home buyer. Okay. So there's going to be that differential, but 100% of the home appreciation belongs to the home buyer. And it is very flexible. They can make extra principal payments to reduce their principal faster, along with the government entities. But so the key trade-off here is that there is a slower initial principal reduction versus the FHA loan, but it's designed more of an appreciation focused ownership path. So that's what, when we're talking to our borrowers, we want them to understand that. And I think it's mainly with any sort of loan, everybody wants interest first. Interest is always typically collected up front, and then, you see the bigger principal reduction later. But, they really, the tribe really wanted to give the home buyers the benefit of all of the equity and charge a little bit up front and then a little bit every month by designing that 40-year structure for the homeownership agreement. Bottom line, balances tribal financial objectives with homeowner wealth building, and it's a strong alternative for buyers unable to qualify for FHA. So what this means is it's a win-win for everyone. Okay. But of course, this is much better than any sort of, seller option to purchase out there. Not only do they get to pick any home that they want when they're out, searching for their property, they have the security of the homeownership agreement memorandum recorded on title. So the client's interests are protected. This is through a government entity and not an individual. So when they're making payments, the mortgage payments are getting paid. It's not going to some individual that perhaps is wanting to pocket all the payments and then run off on his own home and, get a foreclosure. I actually saw that happen a lot in the early 2000s. So it's definitely a much more protected program for the home buyers. So again, tips and tricks for a smoother submission. You're looking at cover letters, your 1003 being fully completed, letter of explanations. When I'm meaning cover letters and letter of explanations, let's tell the underwriter over at Tule River your home buyer's story, okay? We want to tell them, let's say you're submitting your file and the home buyer doesn't have any assets in their bank statements. Let's put in a cover letter that they're saving all their funds at home and we'll deposit it later. Maybe they're getting a gift. Let's let them know that they're getting a gift. Maybe there's a, credit situation to explain because we're looking for an exception. Typically, the government entity will grant exceptions and they want usually reserves. So, 2 or 3 months reserves with a letter of explanation can usually get us our exception if we're looking at maybe I don't know, 573 credit score, or our DTI is 61. It's just over 60. Um, Also, the 1003, when submitting it, we want to make sure addresses, phone numbers, all the little bubbles are marked, because the pre-processors over there, unfortunately, will send them back to us, and that just causes a delay, and we hate to delay anybody's files. Um, Current home disposition. Do they currently own a home? Are they going to sell it? Are they going to rent it out? We have income calculation worksheets for you. Are they wanting to use the tiered income option? Did you provide the CPA letter? What is your thought for how low it should go based off of how many employees they have? So, putting that information in front of the underwriter is going to probably actually more than likely guarantee you a much better looking pre-approval than others. In addition, we want to talk about workflow again and the process, setting the proper expectations. I know that there's been a few that didn't come to any of these trainings, and in their mind it was just a traditional mortgage closing, and we ended up having an expired waiver from title. We needed to get a new one, and that caused a 2-day delay in closing, and everybody could not understand how this was happening. Um, Many moving parts in this transaction. So not only do we have the two files, we have the home buyer TBD file, and then we have our Tule River subject property file. They're both getting different approvals. We're having double conditions to work off of. Luckily, the subject property file with Tule River here at Trevisa, we're only underwriting property because we don't credit, income, or asset qualify the government entity. And then the home buyers conditions from the government entity, they're all standard. And so as you start moving along, you'll get used to what is required, what is needed. I have loan officers now that are closing these in, 21 to 25 days. When I was running EEP, the average was 37 days. So make sure that you're setting the proper expectations for closing times, especially if you have a property that comes back that needs a home inspection, that needs repairs, that you get a termite and it needs to be treated. Many different things with the property that can cause delays, and then closings. This is not a same day close and fund transaction. Let me tell you why. The Tule River signers are sitting out on the reservation in Porterville, California. It is a 1 hour drive to get to the closest UPS or FedEx drop box, okay? And it's at 4 p.m. So they have to leave by 3 p.m. to get all the packages dropped off in time. I believe they are saying their typical cutoff is at about 1 p.m. right now. That gives them enough time to sign, notarize, package up, and get the package out by get on the road by 3 o'clock. So, and this is Pacific Standard Time. If your closing docs do not get to them by around 1 o'clock Pacific Standard Time, there's a good chance that your package isn't going to go out that night and that it's going to go out the next night. And we all know that, we all need originals. There's also wire transfers. Your home buyer is going to wire the final bottom line to Tule River. And then once Tule River receives that wire, they're going to wire the bottom line on the final CD to the closer, or the closing agent, to the title company. Um, So wires going all over the place. We want to ensure that as soon as we know what that final funds to close bottom line is, that we're getting our home buyer over to the bank and getting those wires initiated as soon as possible. So, sorry guys, a few critical components for a successful EEP file. HOA approval by entity. So the government entity is purchasing this home non-owner occupied. So we have to verify that there are no restrictions within CCRs, bylaws, or even just a letter directly from the HOA, that there are no restrictions for them to be able to go out and immediately after the purchase rent the house out. I live in one of the largest PUDs in the United States, and I had to sign a document that I wouldn't rent out my home for at least a year after I purchased it. So we're looking for situations of that nature because it did happen, and there's a home buyer out there paying an extra $200 fine every month, and they don't get the keys to all of their amenities. No pool, no exercise, everything. They're cut off to everything because in the homeowners association eyes, they didn't purchase the property legit, and Tule River rented it out. Assignment addendums. So we want to make sure we get the assignment addendum signed before we start phase 2. We cannot issue the initial disclosures to Tule River until we have the assignment addendum signed by all parties. So making sure that you get that signed as soon as possible. And then if the borrowers are retaining an existing property, making sure that the guidelines before you tell them yes or go under contract, because we're looking at limited DTIs, 40 over 50. We're looking at 3 months reserves. They have to provide the lease agreement and the deposit receipt for the first month's rent. Okay. Utilizing our pre-approval checklist when you're submitting your TBD file. There is a referral at the bottom that needs to be completed, because when we're uploading your file to the portal over at the government entity, we get a hard stop if we don't fill that in. Making sure your condo is FHA approved. So if you have your home buyer out looking at condos and they see one they like, let's check on FHA connection. Let's make sure that they're FHA approved. And then, of course, the pest and termite inspections. 35 states that they require pest inspections. This is the government, or this is their overlay. Okay. Again, the property inspection, the approved title company. So we have a list of approved title companies, and it's not the escrow officer or the attorney or the title company that needs to be approved. It's the company that's insuring the title. And we have a lot of companies that have already gone through the process. First American, Westcor, Landmark, Ticor. There are 3 companies that will not agree to the verbiage in our sovereign waivers of immunity. Okay. First one is Stewart, Fidelity, and then Chicago. So if you get title and you see one of those 3 companies are involved, we want to either switch title companies completely, talk to listing agent about doing a split closing, or you can see if we can get them approved. If it's not one of those 3 companies, the tribal board meets once a month, and it's typically every 3rd Tuesday. So it could take some time. If we just missed that date, we might be looking at a delay because we're trying to get that title company approved. Okay. Hazard insurance. If you decide to procure your own homeowner's insurance, there is a list of items that Tule River requires on that deck page. There's also some forms that need to be signed, not only by your home buyer, but also by the agent. So you want to give these forms to your agent up front to make sure that they agree to them. I've seen some, go through the process of approval with Tule River. After 2 weeks, the agent won't sign this form. And so, most people we can order the homeowner's insurance for you directly through the entity. And most people go that route because it seems to be quicker, easier, and the premiums are truly they're not the same, but they're not much more. But I've actually seen some lower. So, and then again, the seller credits cannot cover the entity fees. So making sure that you know ahead, your home buyer has to bring in those entity fees.
Monique,
So
if I may just add on that, I'm sorry to interrupt.
yeah.
If I may just add on that list, we just recently have had a few inquiries, but as far as make sure that you know that the FHA loan limits by county will apply. So you will get on your TBD, you will get an approval with an X loan amount that the borrower can get. But if it exceeds the county loan limits, the county loan limits will apply. Again, it's going to be an FHA loan, so it has to comply with FHA guidelines. And Monica, I don't know if you touched on the when you talked about the bank statement option for income. Make sure if you are looking for a 10% expense ratio, that they will require a CPA letter with that, correct, Monique?
Yep. Yep.
That's it. Thank you.
Absolutely. Yeah. So what we had a situation where somebody submitted a file, and the government entity, when they're underwriting your TBDs, the address is TBD. They don't know what the county is, so they may send you an approval for higher than the county that you end up finding the home in. That doesn't mean that that higher amount is still good. You then need to go off of the county loan limits per FHA guidelines. So the iTunes competitive market. This iTunes is one of the biggest products, the reason why people come over here. And look at the down payments, 3.5 versus 15 to 20, 3-month bank statement versus 12 to 24, the DTI of 50 over 60 versus 43 back ends, and then you need 2 comp factors if you want to get to 55. We only require 1 major bureau and 580. So definitely Trevisa is really in that iTunes competitive market. We also have a lot of support over here. So we have our support center. We have our dedicated phone line. We also have our email of EEP questions at trevisafinancial.com. These come directly to me. So if I'm in trainings or a few meetings, and if I don't answer, leave me a message, shoot me an email. And I'm actually quick at getting back to people. At least I feel like I am. I don't know, Norma. Do you think I'm quick at getting back to people?
Yes, you are.
I really try to. I hate when people take forever to get back to me. So I guess that's probably why I just have instilled that I got to get back to people as soon as possible. We have our resources. So not only do we have that EEP hotline for our phone and our email, we have this weekly training with our Q&A after, so you can ask as many questions you want when we're done here in just a second. And you can set up your own private training. So maybe you want to now do a private training for your entire office and your ops department. We have a TPO Connect training with the process flow. I go more into how to set up your files, what the process flow is, how to register them, what needs to be in those files. So inviting people to those trainings, especially your ops, and or setting up a private training, we can do those. We also have flyers available, okay? So you can get flyers like this that has your name, your company logo, and then also I can send a presentation of this that I just did over to you if you would like, where you can enter in your name and your logo. I believe it goes down here and in here, and then there's some other places for you to put it. So if you decide that you want to start hosting this webinar for some of your realtor partners, or whatever you want to do, you can do that. Just let me know if you want a copy of it. But now we're going to go ahead and move on to our Q&A and see if anybody has any questions. Okay, so yes, Barsha, if you want a copy of these slides, if you could just put your email address in the chat, and then I can go ahead and email that over to you. I'm still checking on, I see that you came to my training just a second ago earlier for the TPO Connect. I'm still looking in to see if I can share that slide show. I know that I can share this one, so I'm still looking into that other one. Is there a prepay before they can refinance, or do we have realtor training? So I might need a little bit more clarification, but I will tell you that when they do get their stuff in order, you know, whatever it may be, credit, income, citizenship, and they do qualify, they can assume the government entity's FHA loan. I believe the last time I heard, I'll have to ask the servicing director over there again, but I believe it was $1,800 that the servicer charged to do an assumption. Unfortunately, there's no gift of equity, and let me tell you why. Because Tule River is the home buyer, and FHA requires a relationship for gift of equity. And so there is no relationship between the seller and Tule River. So we're not able to do gift of equity, unfortunately. Can the borrower's referral be someone involved in the transaction? Is seller? Yes. Yes, you can, they can. So I even had somebody use their manager because they didn't have any family that lived locally. But yes, they can use anybody as the referral. So they can streamline. Somebody wants to know if they make 7 payments, can they streamline? They can streamline after the 7 payments, the 210 days after they've assumed the government entity's FHA loan. Because currently, the FHA loan that is being taken out to purchase this home on behalf of the home buyer is only in Tule River's name. They're the only ones vested on title and on the deed. The only thing that is with your home buyer at that moment is the homeownership agreement they have with Tule River that is recorded on title. Okay, so they have to go through the assumption process to then be on the loan and be on title. Then you can streamline them after the 210 days. Gift of equity to borrower to lower sales price. So for the gift of equity, so I don't know if has FHA changed guidelines to where a gift of equity can go to anybody, or does it still have to be a family relationship? I truly, these days, since I've been doing EEP for the last few years, I only look at property guidelines for FHA because that's all that really truly relates to this program. But do we still need a relationship to do gift of equity? Because if so, the borrower is Tule River, and there's never going to be a seller that is a relationship to Tule River, if that makes sense. So, but the buyer technically is Tule River on the FHA loan. Does that make sense? So even though a dad might be selling the home to son, Tule River is yeah, that's what I thought. Family member. So because Tule River is the actual buyer on the FHA loan, they don't have a family relationship with anybody that's selling their home. So that is why we can't do gift of equity. Yeah, that's fine if the seller wants to lower the sales price below market value. That's up to the seller of how much they make off of their proceeds in there for their home. They just can't gift any of the equity. I mean, they can even, do max contributions to make sure all of the closing costs. And then if they have any money out of pocket that they want to gift for the rest of them, they can even do that as well. They just can't gift to equity. I don't know, maybe if they have like 20,000 sitting in the bank at home, they want to gift that and then make that up in the sale. If that makes sense. All right, guys. Does anybody else have any questions? I think I went through that really fast today. I'm sorry if I was talking fast. But anybody that wants this presentation, just let me know, let Norma know, and we can get it sent out to you and you guys can use it.
Do you guys, do you want to post your email address on the chat for those that may not have it?
So only the assumption within 210 days, and it's a flat yes. So they have to assume the government entity's FHA loan first, and then they have to wait the 210 days. And from my understanding, the servicing company that services these loans charges $1,800. If the loan gets sold, it might be different from company to company, but from my understanding, it just ranges, and it's I've never heard of one over $2,000. Okay, are you writing down I think we can get your guys' email addresses after the meeting.
I just saw that they put in their email address.
You're welcome. You guys, please feel free to reach out to myself and Norma anytime. We're here for you guys. We truly do want to support you and help you with your business and help your files go through smooth and help you with your first registration. So if you have a first registration and you want to jump on a call for 15 minutes, you can share your screen and I'll just be in the background watching you, maybe giving you pointers if I see something that needs to be done. That's totally fine. I understand that, sometimes it's easier to actually do it than watch somebody. So let us know if you need anything.
And guys, thank you again for joining us. Please continue to check out our pricing. We do other products other than the earned equity program. We do the conventional FHA, VA, and USDA loans. So please check out our rates. You guys, we have our processor underwriter accessible for scenarios for your conventional FHA, VA, USDA loans. So keep that in mind and keep us in mind when you are selecting a company for your other products. Thank you again. Thanks, Monique. Talk to you guys soon.
Thanks, everybody. Bye.